Tonight we're going to talk about long-term care, getting planning right. It's a great presentation. I'm going to try to do these every so often, every month, every 6 weeks or so, to inform, educate, get some more material out there. I've got some neat resources for this, and also try to put in my own flavor and my own experience, what I'm seeing out there. So a little housekeeping. If you could give your questions to the chat, that would be great. I may answer them along the way. I may wait until the end and grab a few questions at the end. The presentation goes about a half an hour or so. So we're not going to, it's a broad brush on long-term care. So we're not going to get into super nitty-gritty, but we are going to get into what's going on with the whole arena, why it's important to look at it now versus later. In fact, I've got some things on an agenda here. Let me just give you the bullet points. So we're going to look at the long-term care basics, contribution rules. We're going to look at risks from emotional and financial side, the average median price of long-term care costs, particularly here in the East Coast of New Jersey, some misconceptions about long-term care, and factors to consider when making a plan. And then I'll give you an option to reach out to me at the end if you want to get some more information. What I've been doing is some shorter 15-minute Zoom or phone calls just to go over some more detail and then decide if we want to take this to another step. The reason that I decided to focus on long-term care as an initial webinar for 2022 is this just seems to be coming up a lot more in my meetings with clients, with you all, and also learning about stories with you, with your parents and other relatives or friends that are struggling or trying to work out these issues in the care arena. So I think this will give you a nice background. It's a broad brush. It's kind of like if you were painting a picture, you would paint the sky first and the outline and then get into the details. We're going to get into some detail, but not super heavy that way. So as I mentioned, if you have a question, throw it in the chat, and then I'll get to that at the end, or maybe during we have a little time and may stop. There's a quiz in there, and then there's it's going to be graded. No, there's just a few questions that come up that are interesting to find the answers. So let me get the screen share going, and we'll dig right in. So let me get that. And here we go. All right. So this is entitled Getting Long-Term Care Planning Right. A lot of different ways to look at this and a lot of different ways to do it. So we're going to explore that right now. There's some disclosures here that I need to share with you. Take a minute to look those over, and then I'll move on. Okay. So here's the first quote. Whatever happens, I don't want to be just don't want to be in a nursing home. So a lot of times we think of long-term care as a real elderly person in a nursing home, maybe right towards the end of life. And it's not that at all. It's expanded and broadened to mean a lot of different things. So let's move on and go through what I mean. So long-term care isn't about an elderly person sitting home alone. It's a range of services to help people with health and personal care issues. And a lot of you on here tonight, I see a few new people coming. That's great. We just got started. Are are going through that maybe with a parent, or maybe you've just gone through that with a parent recently. So you know what I mean. So what is it in a definition sense? It's a variety of services designed to support people who need some help with activities of daily living, or maybe they have a serious cognitive disorder as well. So these ADLs, or activity of daily living, include, you see them listed there. There are things that we take for granted, but over time they can be an issue for people. Majority of people who are in long-term care situations are maybe 80 plus of age, and things like bathing, dressing, eating, getting around, toileting, things of that nature. Sometimes these things can be hand-on care or standby care. We're going to go through some of the differences of that. So these long-term care settings can be a variety. I'm going to go through the detail. Here are some of them: at home, community-based care, independent living, assisted living. Assisted living is the fastest growing area of long-term care. You see a lot of those facilities around. You see the Sunrises and some others. Nursing homes only care for about 4% of all the long-term care settings now. So it's gotten to be a big industry with a lot of different types of setups for people. So if you look at home care, it can mean you've got some family or friends supporting. I know some clients, they've got 3 of them, they're sisters, they're all supporting a grandfather. One moved in with him. We've got home health aides that come in. They're hired. They're typically licensed. They may come in for a few hours. They may come in all day, depending upon the needs of people. They may help with the physical aspects and the medical. There might be some people that come in and do things that care for upkeep of the home, like support services. Visiting doctors and nurses can come in at home. Some people need some medical equipment, oxygen. You see the picture there. And then there's case managers that can handle and oversee the whole spectrum of care. Community-based care is another avenue. You see that a lot. You see adult daycares sprouted up around, and they typically are run independent of a long-term care institution, but they give some break for in-home caregivers. There's adult daycare, as I mentioned, social support, come for the day, some health services, and a person who's in home and is getting care, maybe even getting care from a family member, can get a break. Independent living, these are people who are doing everything on their own, typically, either at the home, or you see some continuing care retirement communities. There's some big ones. There's, I think it's called Lantern Hill in New Providence. It's really, really grown. My wife, Becky's parents lived in a big one out near Lancaster, a very sprawling ranch carriage home setup. Some people in the continuing care can get a little limited help if they're independent. So they can characterize that as independent living plus. So they might need some help with medication, making sure that they get their medications right, they renew them. They might need some personal care. Maybe it is just taking care of them, their hygiene. So, but for the most part, independent living refers to people who can do pretty much everything on their own. They don't need a lot of help. Assisted living, though, is a more in-depth care. And now you've got a situation where they're living somewhat independent. they can be totally independent, but a lot of people in assisted living need some help for the activities of daily living, or they have a cognitive situation where they can't take care of themselves. They need some supervision and they need some help with those activities of daily living. It's residential, it's at a site. My mother-in-law is here in Morris Plains near my home in Arbor Terrace, a big company that does assisted living all over the country. And there are a lot of these. So the benefits there is it's social, there's activities, there's meals, you can get snacks. They have trips that they'll organize. They'll also take people who haven't, who've lost their ability to drive daily. They'll take them to the store for clothing shopping, or maybe just to the ShopRite to pick up some odds and ends. So that's assisted living. As I mentioned earlier, the fastest growing segment of the long-term care industry, but not the majority of people that use that. Still, majority of people having some care in the home. So here's a little quiz. I mentioned we're going to have a little quiz for a minute. Match the correct answer to its correct statement. The choices are just 3%, 8%, or 70%. So we don't get a lot of choices to fill in here. Letter A, percent of Americans over 65 who will need long-term care. Jot it down, maybe think about it in your head. Is it 3% who will need, or 8% of Americans over 65, or is it 70? B, percent of Americans, who think it's very likely they will need long-term care at some point in their lives, projecting that, yeah, you know, this is something that I think we really are going to need. And C, percentage of Americans who have long-term care insurance. Well, let's take a look at the answers. First one, A, percent of Americans over 65 will need long-term care. 70% is the latest percentage. Source is National Association of Insurance Commissioners. They do a lot of studies on this. I've seen a number of white papers. It's a blend, that's 70%. For males, it's closer to 50, 55. Females, it's 80 to 90%. So 70 is a blended rate. Most of us are going to need some help later down the road for just those activities of daily living, just having a normal, fruitful life. Secondly, letter B, percent of Americans who think it's very likely they'll need long-term care at some point in their lives. So only 8% of us think that we're going to need some care, when studies show it's 70% and maybe higher for women. And C, percentage of Americans who have long-term care insurance, only 3%, which is a real low figure. State of Washington and other states are putting together programs. In Washington, a couple of years back, they came out with a new law with a payroll tax to pay for long-term care expenses, or people could avoid the payroll tax by getting their own insurance plan. So the insurance plans have been wildly popular as an alternative to a payroll tax in Washington. So here's that 70% disconnect, where the expectations, only 8% of us think we're going to need some kind of long-term care, and the reality is 70. So we want to bridge that gap, and we want to talk about what we can do and what we can plan for. Here's a slide on the cost of long-term care. On the left is the estimated cost for medical care, which includes Medicare, Part B, deductibles, co-insurance, Medicare supplements, and the rest. So a couple might spend upwards of $300,000 over the course of their retirement for medical care. And that keeps going up and up. That's gone up about 30% in the last 10 years. But the cost of long-term care, as most of you on here know, if you've been involved with a family member or have a friend that's talked about it, is much, much higher. The cost of long-term care nationally is between, say, 50 and 100,000, 51 and 105. In our area, 72,000 to 155,000. I can tell you that if there's different levels of care and different rental fees, where my mother-in-law is in Arbor Terrace, but her care runs between 10,000 and 11,000 a month. And then you get into all the emotional and financial risks and costs to the family. So when someone needs that kind of care and those kind of expenses, it becomes very stressful, and family strife about what to do, how to arrange care. Should you choose? It's a balancing act between the best care, which might be the most expensive, and medium price care, which people in the family might not think it's the strongest care. Sandwich generation, so it's usually the lower generation under the parents that can have some guilt, weary, very stressful. On the financial end, caretakers get involved. They lose wages, they miss work. A lot may have some physical ailments that they develop as well because they're physically taking care of an elderly person. There can be unintended tax consequences. What should we do? Should we sell the house? Should we liquidate an IRA? All those kind of thoughts and decision making. And then, of course, for children, grandchildren, generations, a smaller or non-existent inheritance because of these expensive costs. The question on here, have you seen an 85-year-old woman taking care of an 87-year-old man? I've had that situation with clients. And I've also seen some of the caretakers pass before the person that's needing the care. So that can be a real sad situation. Why are people not planning for this critical issue? Well, in a lot of cases, it can seem remote, far away. People are in their 50s and 60s. They might have a situation and a long-term care arrangement in their 80s plus, so that can be 20 to 30 years. They don't want to think about it. Maybe think Medicare or Medicaid might pay for it. We're going to get into that in a minute. They don't think personally they're going to need long-term care. Maybe their family has been strong in that regard and not needed care all along the way. Or maybe they're going to depend on other family members. The insurance, maybe they think the insurance and other kinds of ways to plan are too expensive. They're going to pay for it out of pocket. A variety of reasons that you can see here that people put this off. So won't Medicare or Medicaid pay for this? We're paying premiums for Medicare. Well, let's take a look at what they do. Medicare is not a plan most people want to rely on. Many are not eligible, Medicaid particularly. Here's the misconceptions. Medicare doesn't pay any long-term care costs at all. It pays for a limited time, less than 90 days for skilled nursing care and therapy. Basically, someone has to be coming from a hospital stay to get that. There is no custodial care, no assisted living, independent care, any home health care, only a short-term limited 90 days or less for certain situations. That's all Medicare is going to do. Now, Medicaid, on the other hand, does cover long-term care, but there's all these questions about eligibility, and here's how it works. First off, Medicaid surprise number one, you have to use up your assets and have very limited income. So a person to qualify for Medicaid has to get their assets down to a couple $1,000s, and their income has to be very minimal, right around the poverty level or below, somewhere in the $2,000 a month level. If their income is larger than that and they do qualify with assets, then Medicaid is going to just take that income flow to use against the long-term care expenses. So that's the first part, limited qualifications for assets and income. Secondly, you might think, oh, okay, I could just gift away my assets, change the title on them, and then get that down to 2,000 rather quick and easily. But Medicaid has figured that out. It used to be 3 years. Now they have a look back period that goes back 5 years to look at when these gifts or transfers are made. And they do a very laborious look at a person's finances before they qualify. And if there is those transfers within that period, then there is a disqualification period that goes forward after the person has applied. Thirdly, no room at the end. I mean, there's 85 million baby boomers all moving in retirement now, next 10, 15 years, and then possibly going to strain the long-term care system down the road. A lot of facilities, the assisted living particular, they have Medicaid beds, but they want people to pay for a year, maybe two. It depends upon the company and the facility to get into a Medicaid setup. Other facilities may not take Medicaid patients whatsoever. So, and then if someone does get Medicaid and qualify, they might not have the same setup that they had before. It might not be a private room, might be with others, may not be at the same facility that they were in before if they were spending their own money or say insurance money. So Medicaid is paying for a lot of long-term care, but hard qualifications and limited in choice. So we mentioned that the strained healthcare system, aging baby boomers, we're all going to hit this at one time within the next 10 to 15 years. And it's going to put a strain. The healthcare system can't grow fast enough to meet the demand at this point. So here's another quote that I hear bantered around. I heard long-term care insurance isn't a good deal. So are there really any options? Well, we're going to take a look for a minute at long-term care insurance, the history, what's going on now. So original long-term care insurance came out in the early 80s. It was, in a sense, priced too low. The actuaries felt that some people would drop their insurance, which hasn't happened. They underestimated the claims experience. Excuse me. So they've had to raise premiums quite a lot. And I've seen a number of those with some clients that I've had, and we've had to make some tough choices about whether to keep the coverage or to modify the coverage with the increases in premiums. There's been some question on claims, policy cancellations. Some large companies have gotten out of the long-term care business because it is a business like group health insurance, where we have here in New Jersey. We have United Health, then we have Horizon. They're big players. They need critical mass of people. It's the same thing with long-term care. Some litigation. So there's been problems with the original long-term care policies. So what happened was regulation came out. Now dementia, cognitive, Alzheimer's is covered. You don't need a hospitalization requirement or skilled nursing requirement. They've clarified and strengthened the terms. There's a lot more options with long-term care policies where you can design it better. They look at things on a more strategic way up front. In my case, with individual policies, a lot of companies give me a questionnaire to ask someone ahead of time. And if there's some major health issues that people can't answer no to the question per se, then it doesn't make any sense to go forward. They're not going to approve someone. So you really have to be relatively good health to get these plans. Now they can't be canceled except for non-payment, but the premiums can go up, and they have gone up. They get the states regulate the premium increases, and the insurance companies have to justify them. So they can't just all of a sudden come in and raise yours or mine policy premium in a large degree without proving their claims relative to the premiums, and doing it on a mass basis, on a state by state or national basis. So a lot of new things have come out with individual policies. However, premiums have gone up. So the initial premiums are a lot more than they used to be. And there's no guarantee that they're not going to go up at least a few times before a claim is going to be possible. So there's some new approaches that have come out in long-term care to address people's skepticism, negativity, if you will, provide a wide range of flexible options. So let's take a look at what that might be. So again, the long-term care, the individual coverage has been improved. There's only a few companies involved with that. Mutual of Omaha, who you've probably seen and heard ads and things. They're the big player there. Life insurance and annuities. The life insurance industry has really stepped up its game. I'm going to talk about how that works in a minute. And then other financial strategies that people can use that you might not have thought about. So we went over the improved long-term care individual policies where you can design them more with budget concerns, inflation riders that can be put on or taken off down the road, smaller inflation or larger inflation, maybe cover part if not all of the projected costs, but just get into the game. But the biggest change has been made here with life insurance. Life insurance now has riders that are built in or can be added up front that add long-term care benefits, not to the cash buildup of a permanent policy, but to the death benefit. So they're available for a pay down of the death benefit up to what's known as an IRS maximum for tax-free payments. And so people can use their life insurance now while they're alive for these costs. And the definitions are typically very similar, a trigger to get benefits out of your life insurance that they would be for a long-term care policy, which would again be those activities of daily living or a cognitive scenario that requires supervision. And so there's a lot of benefits to the life insurance plans because they include a death benefit and they include the cash value. So the life insurance death benefit can be structured to refund premiums. So if someone keeps their plan, they are only going to be out. Their premiums typically are going to be covered by the death benefit. Now they started out with some plans that really had their benefits skewed towards long-term care as opposed to just pure life insurance. And those plans started out with a lump sum or a one-time payment, and now they've broadened those to 10 years or even lifetime. So a lot of flexibility. People can walk away with their cash value if they won the lottery or didn't think that the insurance was appropriate anymore, they can walk away with quite a bit of money relative to the premiums paid. So there's a lot going on with these plans, and I anticipate even more design and more creativity. There's also annuities for people who can't maybe qualify for life insurance with their health that have a bump if they get into a long-term care claim or scenario. So if someone put a certain dollar amount in, it would pay a much higher amount if a long-term care scenario came in place. So these are within the last 5 to 10 years, and it's growing, and it's worth a look-see for everyone. Here are some other financial strategies that people can consider leveraging long-term costs. They can look at their home, they have it, existing life insurance policies, IRAs, and health savings accounts. So equity in your home is available. There's home equity loans that get used. They are flexible, they're low rates. They do come with a payment, however. Reverse mortgages work where a mortgage company will lend up to a stated maximum of equity in a home, usually around 55% of a home's equity. No payments. The word reverse means that the loan on the home is actually growing, but it can never get to be more than the value of the home. That's the limit. There are a lot more regulations. There were some problems with reverse mortgages. And the life and long-term care industry, there was regulations that came out a while back that straightened that all out. Reverse mortgages have some little additional fees, but they can be a nice option because there's no payment. And a lot of people have 401ks and homes that they can use. The one thing about using money out of your home is it's got tax benefits, typically no tax for the tap of these funds, as opposed to what we're going to talk about next, is a traditional IRA or Roth IRA. They're going to come with taxation to do a distribution, not on the Roth, but on the traditional. So again, I mentioned earlier, when you get into a situation where people have long-term care needs and expenses, it becomes a juggling act of what would be the best to use. What about tax aspects? And if it's not set up in a plan, then family members can disagree. Let me back up here. Another thing that's not considered a lot: life settlements, life policies, both term life and permanent life. There's a middle market for those policies, particularly people who are about age 60 and above, where entities buy the life insurance policies, give the insured a dollar amount, typically less than the face amount, but a dollar amount while alive, and they put them in their portfolios, and it pays off to the entity down the road. There's also accelerated benefits, which we talked about inside life insurance policies. The new ones are the long-term care riders, the ones that are in the existing on older policies. Typically, people have to be terminally ill to get the face amount and get some benefits, but they're in there. And a lot of people don't know that, and they don't consider that as a source. Health savings accounts, lastly, can be used for depositing money, getting some tax benefits, and then using that for a premium or care, mostly premiums. What about simply self-funding? That's the other side of the coin. Just use their assets. So that is a tough way to go, because there, as I mentioned, so many different types of assets, tax aspects, putting a lot of pressure and stress on family members at a tough time when they're trying to figure out what care should be applicable. It's not really a plan, but it's certainly an alternative for people to use. But no one knows how long the care is going to be needed and what kind of care, how much it's going to cost. It's much better to put a plan together and have that there for yourself and for your family members if a need should arise. Here are some factors when putting some of these plans together. As I mentioned, I go over these with clients, and everyone's personal situation is different. So different ages, what are health, where is it located? How about family history? That gets brought up a lot about other people in the family and what their health situation was. What kind of assets do they have? Where is it? What's the taxation? What other legacy, other estate plans do they have going forward? So here's some 3 questions that everyone can ask about their long-term care. Who is going to provide that care? What do they see? What do they would like to have happen? For most people, it's care in their home, if available. But I can tell you, if people go see some of these assisted living arrangements and the social aspects and the physical setups, a lot of people like them as well too. So again, who, where, and how will you pay? As I mentioned, they're not inexpensive, and it's a significant cost and investment in these in any of these care aspects. So here's some points to keep in mind. Everyone's situation is unique. You can receive care at home. Again, as I mentioned, the majority of people do that. A plan that you have doesn't have to cover all of it. Insurance doesn't have to cover all of it. It should be something to be reviewed and looked at and come up with a game plan. If self-funding is the game plan, then let's make that the game plan and go with that and know that that's going to be the avenue. And if there's certain assets, that are going to get liquidated first, maybe get some of that down in writing so you're not causing a lot of strife and arguments and stress with other family members. So you want a custom approach, a real plan. As I mentioned, I'm doing more and more of this along with the core retirement planning and cash flow, and putting this in place in addition to the retirement plan and feeling secure, feeling peace of mind about it all. So that's my formal presentation. Hope you like that. I mentioned it was going to go about 25, 30 minutes. Here we are, 7:38. Come in for a long-term care planning meeting. What I want to share with you, you can leave me a note in the chat. You can send me an email at brian@brybeck.com. You can give me a call at 973-335-9444 or a text to my text number 973-840-7044. I've been having short meetings on the subject, either phone or Zoom for 15, 20 minutes. And then we're deciding with clients or a new person whether to go further, to look at some different avenues, whether to explore it further or not. There's a long-term care planning checklist that we go through. I have a special questionnaire that I use. So as a follow-up to this, let's have a discussion on your situation, the way you might see things playing out, and maybe I can give you some insights in other avenues that you hadn't thought about before. Any questions? Let me look at the chat and see if anything has come up. I don't see anything that came up. I get a lot of questions all the time about, I do get a lot that people say that they think that long-term care is out of reach for them financially, that they've heard negative things about the premium increases and other things. So as I mentioned, the life insurance industry has stepped up. The individual long-term care plans are more varied than ever, more flexibility. The younger people are, the better. And so there's a lot of different avenues. As I mentioned, there's other things that people can use, like mortgages, like an existing life insurance policy that they haven't even considered. So hope that you've gotten a lot out of this. A good broad brush, as I mentioned. I'm going to do more of these in the future. I've got the next one lined up on retirement dynamics and some facts and figures on what's going on in America. And then we're going to delve into some other subjects down the road later in the year. We've been doing more emails and my newsletter every couple months that people have been saying they've enjoying that quite a bit. So we're going to keep all that up, but don't hesitate to reach out for me if you have anything that you'd like to kick around. Doesn't have to just be long-term care. And I thank everyone for being on tonight. I hope you got a lot out of this, and I hope that we can talk in the near future. Have a good night. Thanks.